Hey there everyone, it's Joe from Ainslie's Gold Silver Standard Insights, brought to you by goldsilverstandard.com and ainslieBullion.com.au. Today's topic is Gold Demand Trends, Q3 2022, Record Central Bank Buy-Up. Now that's posted on the Ainslie website. I'll put a link below for you to follow along. Of course, we have Chris Tipper here to break down the morning's news. And joining Chris today is regular contributor and Ainslie team member, Branko Radunovic. So gentlemen, over to you.
Thanks, Joe. This week saw the release of the World Gold Council's quarterly report. This is something we know our readers and viewers all eagerly anticipate as we gain important and detailed insights into who has been buying and selling, which allows us to anticipate what that might mean for demand and supply, and ultimately the price when we move forward. So today, Branko joins us after digging through the numbers to pull out some of the key points, as well as their implications. So welcome back, Branko.
Thanks for having me back on.
All right, so let's start by looking at some of your findings from your analysis of that report. What can you give us a bit of a big picture overview of what it said? What are some of the general trends that we can gather from what they reported there?
So I think kind of the takeaways are like the three main pillars of gold investment: central banks, Wall Street, and Main Street, like the everyday person. They're each kind of got their own trend. So central banks are buying it up, honestly, like we've never seen before, which is quite interesting, which I want to kind of delve into at record-breaking levels. And we have Wall Street, they've been shorting it for a while, but their short positions have increased even more, up to 227 ton this quarter. That's like the gold-backed ETF short, what gold-backed ETFs are shorting at in their totality.
Yep.
And then Main Street, the demand for like bars and coins are up quite a lot as well. So you've got central banks and the everyday person buying it up, and then the financial sector continuing to kind of short gold. That's where we're at the moment.
Because that's quite interesting what you just said about central banks, particularly because if they're buying at record levels, and we just had, of course, that 0.75% rate rise out of the US early this morning our time. There's a lot going on in central bank land. So can you give us a little bit more background around that, because that's quite an interesting one?
Yeah, I think we'll put up a chart to show this, but I think during these kind of economic times that, similar to a recession, banks really, we saw this in 2008, want to buy up gold, and the level they're buying it up is quite astounding. So, it's 400 ton that they bought up last quarter, which is like their highest ever on record, almost double the previous highest quarter, which was in 2018. And then year to year, it's up, I think, about 670 ton, which is by far the most it's ever been since.
That's not a small number.
1967. So, something's going on. The economy, I think they obviously, we all can know the economy is in a great macro situation, and the banks are buying it up like crazy for that reason. And again, they printed so much money back in 2020, 2021, and I think they're finally realizing they need something tangible to help back that to some extent.
That's really interesting, because there was some discussion I was reading this morning that was talking about how we may be in a bit of a changing period of time, where we've had the last 40 years effectively being disinflationary environment, and that people sort of think that this inflation that we're experiencing might be short-lived, and we go back to that. But there's also a growing argument that maybe we've turned to a new phase, and in that new phase, we may have inflation for the next 20 years that's a bit sticky, higher than we've seen before. So that probably backs up some of that thinking. And central banks appear to be thinking that a little bit if they're stocking up, because I know in that environment, it's quite good for gold, isn't it?
For sure, 100%.
So what do you do if financial institutions, so you might have, I know gold's always a tricky one when you're talking to a financial planner, for example. A lot of them go, it's the rock that doesn't earn, that sort of mentality. If you've got super funds and financial planners potentially shorting bullion, because that was something you were talking about there, wasn't it?
Yeah. Well, it's more just an institutional kind of wide of shorting bullion. So a lot of the super funds, I can use financial planners like an example of just being able to take control and do it yourself. That's kind of the point, I think, that is crucial here. It's more, these super funds, if we're kind of seeing a financial sector wide idea of shorting bullion and you are a bullion person, I think it's important to keep that in mind, that particularly your super is going to be working against you. And the way around that is, putting it in your own hands and getting a self-managed super fund, which I think, Cass comes on a lot and talks about. And we are seeing a big trend towards that. At Ainslie, a lot of people are opening up self-managed super funds. And I think, as well, even for someone like me who's very young, what's going on at the moment economically, it's pushing me towards opening that as well. So with the way that financial sector and the financial companies are just continually shorting it, if you are interested in bullion, it's just important to know that and then take control yourself.
And that is really interesting against that background of the previous point when you're making with central banks. When you've got central banks who are effectively setting the policy, if they're buying up and the institutions are selling, that doesn't really add up. So it does possibly make sense in that environment to take a little bit of control of that yourself.
Yeah.
So is that behind? I know we've been seeing a lot of that at Ainslie. This sort of desire for people into bars and coins. Is that part of the story here as well? Is there any data around that from that report?
Yeah. So we are seeing a lot in kind of globally as well. But for example, the China demand has kind of gone through the roof now. It's 70 tons this quarter in bars and coins.
Yep.
India has gone up a lot. Turkey's gone up a lot. The West, like US, has been a lot steadier. It's 6% compared to last year increase.
Yep.
It's
still in the right direction though.
Yeah. European gold retail trading and purchasing has gone up 28%. So it's a broader, just everyone's buying it up, and we're seeing that at Ainslie as well with a lot of new customers as well, people that aren't really used to gold or silver, and their friend might have told them about it, and they're putting a few thousand in themselves.
Yep.
And there's definitely a preference for those smaller, probably more affordable silver coins and smaller denominations.
And when you look at those numbers in a report like that, if you're talking bars and coins, that's all retail, isn't it? Like that's not institutional.
Yeah, of course. Yeah. So that's kind of the measure of retail. Which is very interesting. And, I can see that again every day, new customers coming in, where it's very hard to get those small denominations at the moment. It's more those Asian countries and, China, India, et cetera, that are really driving it. I think China in particular, they had 70 tons, like I said earlier, which was a massive increase compared to the previous quarter.
Yep.
So that's just something to monitor, I think, when you've got, it's just very interesting that you've got kind of central banks, which are, you generally think well-informed, and you've got basically the broader population as well on their side, and the financial sector just continually shorting it. It's quite
there's an opportunity there for people who are paying attention.
For sure, because, in the event of maybe some kind of short squeeze, like we saw with the Wall Street bets crowd in 2021, it could be an interesting opportunity for bullion if these financial institutions have to start their margin calls coming on their shorts if we see a bit of a run. So it could be an opportunity here.
Absolutely. So that leads in. We actually received a question from email from Murray, who sent in this question. He wanted to know our thoughts on or predictions for gold and silver bullion over the next 12 months. And I mean, picking any time frame is always tricky when it comes to an investment. But what are your sort of thoughts over that for the next, in that sort of medium term, I'd call that, over the next 12 months, medium term time frame?
Yeah, I mean, I think given this situation, I think, I'm on the side of the majority, I'm on the side of central banks and the people. I think we're kind of have to go up, in my opinion, given what's going on. And I do think there is this kind of maybe a small possibility, but an interesting possibility of these funds kind of facing a short squeeze, and we can get a real big move, like we kind of saw with the silver squeeze as well, a year and a half ago or so. So I think that is a possibility. But yeah, overall, I think it's not financial advice, but probably a good investment in the moment, given the economic, rockiness.
And I'd just add to that. I mean, I look at a lot of this stuff quite technically, and I've been talking about most of this year this big cup and handle pattern, and it has, you can dig back through the news and actually see some analysis and some charting on that. But that pattern hasn't broken for gold. It's a very long-term pattern, multi-year, sort of multi-decade even pattern where the price has moved up, pulled back a bit, but it really hasn't broken down. So if what I've said before was true, and we're expecting to potentially move into the next 10 or more years of higher than usual inflation before we roll over again in the distant future to another deflation or disinflationary cycle, then gold does very well in that environment, which would align with that pattern. So from my perspective, 12 months is a little bit tricky to predict, but I think that pattern hasn't broken. And while that hasn't broken, we would expect some fairly substantial moves over the next few years to the upside if that pattern remains true. So that would be my thoughts on it. And that's looking at it technically through the charts, but that lines up very much with the fundamental story that you've talked about there and the data that's coming out of that report.
Absolutely. I think we can get both combined. It kind of forms a full picture and makes a lot of sense what you're saying at the moment.
Absolutely. So thank you for all that. There's a lot of information there. It's another one, but I think yesterday was one that was very chart dependent. Today is as well. Definitely worth going on and having a look at the news on the website to see some of that and really zoom in and look at those charts and dig into some of those numbers. So, but I think that overview is really helpful. So thanks for that today, Branko.
See you next time.
All right, thanks.
Thank you, Branko, for joining us. And Chris, I'll see you on the next one. And for the audience, I want you to head over to the Discord channel. That's discord.gg/gold to continue the conversation. Chris and Branko will be there for the next 1 or 2 hours after the upload of this video. So head over there, ask your questions, get a response, and let us know your feedback. We really want to hear from you. I always want you to subscribe to the YouTube channel. That's youtube.com/Ainslie Bullion for the wide range of informational videos we put out 5 days a week, including specials and more. And while you're on the internet, head over to goldsilverstandard.com because that's bringing gold and silver into the digital world. As we say here at the end, balance your wealth in an unbalanced world. Take care, and we'll see you next time.